better than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man, I'ma need some land again.
Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. And today I have a new guest with us today. We've got Patrick.
Hey guys, how you doing?
Patrick is from the B.Invested team. He's the investor relations manager here. Thanks a lot for joining us and being on
the episode. Good to be here.
Cool. So I guess just as a bit of background, maybe if you want to tell the community what your background is like here in the business, what do you do at B.Invested, and how do you help investors?
Yeah, sure. So I've been here for 3 years now, coming on June.
Yeah.
And as part of the investor relations team, help people come on board with the business, come on board as an investor. And once they are on board, make sure that they're getting the right properties for their portfolio, in conjunction with what you're suggesting for them as well.
Yeah.
And help them through the process, help them through the contracts, help them through, setting up finance, or suggesting that we should revisit the finance, take a property back to the bank for a refinance potentially, and just keeping track of their portfolio in general.
Yeah, cool. So, if someone was to call the hotline, 1300 367 925, just giving a little plug there, but if someone was to call the hotline, it would be you or one of the other team that would be speaking to them, and it might have someone that's new, never invested, or they might have investments, they might need help with finance, they might need help with extracting their rental income. Anytime you speak to someone, Pat, someone's going to be making money, right? If someone has 3 properties and I'm stuck, I've seen where you've sent them to our property management team and they've increased their rent by $150 a week, right? I've seen you've been able to send them to finance and they've been able to put a different strategy in place which has saved them interest rates and where they've been able to pull equity. So, when people call, it's like you're the gatekeeper. You're the you're the guy there that's going to be able to make sure that they get to where they need to be. So,
I think things like that, knowing where to send someone or giving the right advice as to what to do next, comes via being here for such a time, and I've still got plenty of time to go, right? Plenty of things to learn as well.
Yeah.
But to see different investors and see different journeys play out, you know what you could have done better in the past, and you know what maybe the next person needs to help them move forward quicker.
Well, we've been talking about this yesterday, and you just mentioned something to me before the podcast. We're now with our second generation of investors. So I've got one of my investors from about 10, 12 years ago. He's at a position where he's got 20 properties. Those properties have gone crazy, done really well. He's at a point where he's about to retire, and he's got his son, just turned 18. He's come over, bought his first property, getting into the market. We've got another client which is coming in next week, which I bought for 10 years ago, 12 years ago, something like that. Maybe 14 years ago, before I even had an office. I was doing what I do, and they're looking at getting their son involved in buying properties. They're retiring as well. So it's really cool. We're actually seeing a lot of these people that are coming out and they're second generation investors. I've got a client that's turning 18 in 2 weeks time or something like that.
Yeah, in about a month, he's turning 18 and he's raring to go.
Yeah.
So he's preparing himself. He's actually changing jobs now, so he's going to be most well prepared. He's talking to brokers. He's getting himself ready.
Yeah.
So literally, when he turns 18, he can sign a contract.
How good is that?
Which is pretty awesome.
Yeah.
So on the flip side of that, we also have people that they wait 5 years or 10 years, and they get maybe a bit fearful or a bit analysis paralysis.
Yeah.
And they do nothing, so it's interesting.
Well, on that front, so you've been working here now for 3 years. You came to a map session how long ago was it? 10 years ago?
Let's say 10, yeah.
10 years ago. didn't have kids, you're just starting out and all that, and life got in the way, and you didn't go and buy 20 properties 10 years ago, right? But since you've been here for the last 3 years, you've built a nice portfolio, and you've got a really cool portfolio, and I'll talk about some of your properties shortly. But maybe just two more intro questions before we get in on Pat's portfolio. So what you're seeing out in the market at the moment, right? Obviously, things have changed. Like when you first came on board working with us 3 years ago, there was the chaos of a outbreak, let's call it that, today, just being politically correct. There was an outbreak of some sort of illness, and a lot of people were scared, people losing their jobs. You've been locked in your house, being forced under martial law to be trapped in your house. No one had ever seen fear like that in their life. And when you came on board, I don't know what you were thinking, but you're probably thinking like, oh fuck, like people are going to buy properties, like people were really scared. And we had the biggest boom ever, right? And now there's talks of banks going bankrupt, and people watching this know that Birchy loves this stuff, and it's fun that the banks are failing and all this stuff. But what are you seeing as the biggest opportunity out there in the market at the moment? Well,
To just go back a step, I think one of the you said what was I thinking at that time, and all of your perspective, let's say, all of your social commentary and all this kind of stuff was all new to me.
Yeah,
right.
I sound like a fucking psychopath or something. Yeah. I said the word
But a big light bulb moment for me, which I carry through to today, and even having a couple of discovery sessions today, I almost mention it on every call, but it's the dollar that's losing its buying power or losing its value.
Yeah.
And so that was really evident with stimulus and all these government injections of cash into the system, diluting the cost of things and the value of things, which caused, was probably a factor of why there was such an increase in the property value back then. But that was a really cool light bulb moment, and I think it applies to pretty much like any stage of a property market or a property cycle here.
At the moment, they tried to stop printing that money. They stopped the stimulus packages. The next minute, the banks are dying, and we've got all this chaos out there. But interest rates have gone up, 3,500% in a year, 3,500% in 1 year. It ain't sustainable at that. I'll do a podcast on this actually as a second sort of topic on this about what's happening out there with the banks. But people are scared, people whatever. But this is the biggest opportunity. This is a bigger opportunity than what it was going back 3 years ago, which is
Look, it's one of those things. You can give the same information to two different people, and one person will go and make $1 million from it, and one person will do nothing with it. So that's what I saw at that stage. There were people that were willing to jump in, but not recklessly, educated decisions, and good advice. And there were people that were a bit more closed-minded and not open to a new perspective. So unfortunately, they just didn't do anything. But they're probably okay with that. There's probably people out there that are okay with doing nothing, but it also means they'll stay where they are.
But they don't think they've done nothing. They just think, I haven't put myself at risk.
Exactly.
Right? And it's having clarity. I think it's important to take that vantage point and look at the whole chessboard and what's happening.
Yeah, for sure.
Cool. And like you're saying, like I know that one of your clients, you just done a revaluation on one of their properties. They settled like 2 weeks ago, 150K. What did it come in at?
This one today came in at 250.
Okay.
Yeah, so that was like,
10 days ago or something?
Pretty much,
There's still opportunities out there. So
150 purchase.
152.
152.
152 and a 250. It's basically 98 grand in equity. 80% of that, it's like 79,000 or whatever, 79.5 grand that they're going to get out as equity. So that's still that you can buy a property for 152K, rents for like $320 a week, $300 a week, pulling out the equity of 250. That's one deposit that's turned into two deposits that turn into three properties. So it's cool. And we're on the No BS with Birchy podcast. What does No BS as a lifestyle for you mean? What does that mean for you?
Well, look, if we're talking no BS, like from I suppose the perspective of this podcast, it's like,
or just in general,
just saying how it is, the good and the bad.
Yeah, exactly.
yeah, so like when I'm dealing with clients, I try and be as transparent as possible.
Yeah.
You know, everyone, like, you can sell the sizzle sometimes of an investment portfolio and how cool it is, and you know, passive income and all those great things, but it's a challenge.
It's not going to be sustainable if you don't look at all aspects of it.
For sure. So there's obstacles, there's finance, there's overwhelm, there's emotion, there's opinions from outside of people, there's all sorts of things that need to be considered, but will come at their own time, and you need to tackle that. But like, I always try and lay that out on the table so people's expectations are kind of met straight from the get-go, so they know what they're getting into. But saying from when I'm speaking to a potential investor, I want also no BS from them. You know, so I want them to give me kind of almost what their personality type is. So I know what the best way to work with them is. You know,
it's the only way you can have a good relationship, I guess, is open communication and just saying it as it is. You know, and we live in a world. I've never really thought about it from what you just said, but like you no BS thought on it is that, you know, you just say it as it is, right? And I think we're living in a world where everyone's too precious and you've got to be politically correct, and you can't say this or you can't say that, or, you know, you're deemed as bloody some sort of phobic or whatever that the world's going to throw at you. No, we're just critically thinking, we're asking the right questions, we're wanting to discuss the topics which may be painful. Like people say you shouldn't talk about, what is it, like religion or politics or money at the dinner table. I'll talk about all of them at the dinner table, right? We're talking about them on the podcast because it's fun, right? And, you know, I think that if people had conversations, there'd be a lot more knowledge out there and sharing the wisdom and different views.
For sure. Some people with different starting points in their portfolio. Someone might come to me and they might have 500,000 or $1 million in their bank account, and another person might come to me with 50 grand. And typically, if we were to like break down the numbers, I reckon it's the person with 50 grand to start with that ends up doing better. Exactly. Statistically. And I don't know what that's about. Like, they're given the same information.
I was chatting to your colleague Gemma the other day, and she said that she got some clients that come on, they go, I know everything, I just want to sign up, want to come on board, want to buy some property, I've been watching Nathan, know everything. And then they're the ones that have got like the biggest issue, because it's like they haven't listened to a lot of things, right? There's lots of bits are missing, and being able to walk through, it's not just a journey of getting 1 to 20 properties in a month, right? There's hurdles, there's consulting that we have to, like, you know, okay, I see this as an issue, and it's communication backwards and forwards. And, you know, you text clients at 2 o'clock in the morning, so maybe not 2 o'clock, but 10 o'clock at night, you text me, this client's texting me this, I'm texting at 2 o'clock in the morning, whatever. And, you know, we've got those relationships with our people that we can, you know, do that, like continue that journey with. But the people that have $500,000, they may have a different view or a different opinion. The person's got 50K, it's like, yes, I need to make it, I want to make it bigger. There's
more
purpose.
Motivation or something. There's something more of like a driving force to actually get out of that position. You know?
I think there's a lot of people that might be sitting here with 50K saying, I can't do what that guy did because he must be on $500,000. But I
spoke to a guy on the phone just literally probably 10 minutes before the podcast. And he said, I'd like to do something, but maybe in six months or so. I said, okay, no worries. What's your current position? He said, I've got about 80 grand in the bank and, you know, $100,000 income. And I said, mate, what are you waiting for? Like, I thought I might need like more than 100,000 to get started. And I said, not here.
Maybe somewhere else.
But not here.
Inflation hasn't hit B.Invested yet.
There you go.
Today on the podcast, Pat, like, we're going to talk about, we had like something that was, you know, a topic for us to discuss, and I was like, no, I want to talk to Pat about his journey, right? Like, it's important because you've come on from watching us, like we never had the podcast back in the day. We had, you know, YouTube and Facebook and stuff like that, TV, all that.
A cool theme song.
Your cool theme song, and then you know, you've been in the business, you work in the business, and you've built a really nice portfolio. What has changed for you? Why didn't you do it beforehand? What do you see differently now since you've been working here for the last 3 years? There's some of the questions that start off with.
So a quick snapshot, like 10 years ago, I was following you online, just watching YouTube videos and whatnot. Just found it interesting, found it fascinating. It's like, that's pretty cool. And then saved a bit of, had a bit of a nest egg, had about 50 grand or so.
Yeah.
And at the time I was a professional musician, so I was a sole trader, essentially. And my wife, well, girlfriend at the time, but wife now, she was also in the same boat. She was a professional singer.
Yeah.
And so we would just live in the dream. We were living our life and we were doing what we love and really passionate about it. But I knew that it wasn't like, I wanted to do something else as well.
Yeah.
Like I wanted to kind of support that career choice, really.
Yeah.
And anyway, so fast forward to me thinking, right, I got to book a map session.
Yeah.
So I contacted someone, booked the map session, came in, had the map.
Yeah.
And basically it was, listen, it doesn't matter what you buy.
Yeah.
Just get on
Buy
just get on the board, right?
Yeah.
Just buy something.
Yeah.
And so I left that session kind of going, okay, cool, no worries. But I was a young 20-something-year-old.
Yeah.
And I woulda, shoulda, coulda, and I didn't.
Yeah.
Right? And c'est la vie, that's life.
Yeah.
Fast forward to now, got 3 kids, got a primary residence, all that stuff. And it would have been last year, I suppose, when my wife came out of maternity leave, and then we could service.
Yeah.
Like, hallelujah, now I can service. So pulled some equity out of the primary residence.
Yeah.
Let's do what we can.
And maybe just share like a few of your favourite properties that you've bought. Like,
cool. One over in Perth. It's a 3-bedder.
How much did you pay for it?
That was 165.
165 for a 3-bed in Perth.
Yep.
What's the rent for?
340.
340. It's impossible to do that. People think it's possible, right? You said beforehand, the 80k, the guy didn't know if he could do it with 80k.
Yeah.
That's half the property cash.
That's right.
Right?
Yeah, that's right.
Yeah, cool.
So that's that one.
Actually, what would let's just go through some numbers, right? 165. What would your mortgage be on that? Let's say
I think it's about 120 or 130.
80% loan, yeah. Let's say 130. And let's say, interest rates have gone up. It's really fucked Pat up, right? Interest rates have gone up on his 130k loan. Let's say it's 6% now, right? Mm-hmm. What would 6% of that be? Be like $7,500 a year, something like that.
Something like that.
$7,500 a year, 52 weeks. That's like $150 a week in mortgage, right? $150 a mortgage. You're getting $340 a week. That's like $200. You got council rates, water rates, strata, real estate fees.
But even then, like let's say the council and the stratas and all those kind of fees, that'd come in every week.
Yeah.
So some months you flush and some months you have expenses.
Yeah.
So, but even then, you just build, like my strategy is I'm not going to go use the rent to buy groceries.
Yeah.
I keep the rent. I build a bit of a war chest for the bills that I know are coming.
Yeah.
And then you sweep. When the bills come, great, no worries.
It's cash flow.
And that's it.
Yeah. There you go.
And that's it. So another property which has performed really great was one in Brisbane. And
what did you pay for it?
that was $460.
$460. Okay.
Yeah.
What did you revalue that? I want you to tell me the revaluation.
Okay, I will, but there's a story behind it, kind of.
Okay, yeah.
Just in terms of the time frame.
Okay, yeah.
So a lot of people say, I'll buy the property, and I'll say, great, you should take it back to the bank.
Yeah.
Now, this doesn't apply in every scenario, right?
Yeah.
Like, I went back to the bank after like a matter of days.
Yeah.
It all depends on your scenario and who you service with and all that kind of stuff, but I was able to do that. And I wanted me to be a bit of a guinea pig for what I was telling people and talking about every day. So I settled on a Thursday for this property, 2-bedroom, $460 in Brisbane CBD. Mm-hmm. And I was joking with the guys at Zinger, because it settled at 2:30 p.m. on the Thursday.
Yeah.
Said, hey guys, can I refinance now? It was like 3 o'clock on Thursday.
Yeah.
Now you have to wait till you get your confirmation from solicitor or something. And so and so it was Monday or Tuesday the next week.
Yeah.
I got the ball rolling with it, but it revalued at $615.
$615. Okay.
So that gave me about $120K.
And then, so you bought this property for $460, revalued it for $615, which is great. And then you told me last week that you had a real estate agent contact you, wanting you to sell the property. That's familiar with the blog. What price does she have wanting that she wants to sell it for you?
I don't know how they get your number, but they did. But so I got this call, and they said, "Oh, look, we've done a comparative market analysis on your property, and we reckon we could get about 810,000, something like that."
This guy, right? You would never,
okay.
not even I would have thought that, right? Like, it is what it is. It's where the market's at, right?
Yeah.
You didn't have to, you've held it for like a year, you pulled out your equity. Sometimes people go, well, I can't get the equity out, it's stuck, right? And sometimes we'll get a property which will have the equity which is stupid. Like, we're like, fuck it, how about you take a bit of that back? It's too much you're giving us, right? Got a good amount of equity back, but now it's just the gift that keeps on giving. It's like, you got an offer, you got the choice now, do I sell it, do I keep it? And
yeah. Well, another thing that you often say, like once you sell the property, you lose access to the growth, to the cash flow, to the equity, which will enable you to go and buy more property.
Yeah.
Right.
Yeah. And you haven't had anyone call you up yet saying, oh, Pat, I'm so happy I sold a property 10 years ago, I made $100,000.
No. I might have had one client who said, I'm glad that we had the strategy to sell a property.
Yeah.
I sold one property and then went and bought a block of units.
Yeah. But no one's calling us up saying, hey, I'm so happy I sold a property and swapped it for cash, because they're all worth more.
Yeah, like on the back of that, like right now I've got 3 properties. I've got another little one that purchased for 120 and that's only for 360.
There we go.
But my whole thing isn't like, hey, cool, I've got 3 properties, mate. Now, like, I want to be hitting you up and saying, how do we get the next 3?
Yeah.
You know, because again, like, you want to, well, I want to have 10, 15 or as many properties as possible.
Yeah.
Because, you know, the likelihood of increasing every rent by $100 or $150, I think probably is less likely. But if you've got 10, 15 and you raise them by $25, $30, $40, something like that, which is reasonable and also good for your tenant too.
Yeah.
Like,
they're not stuck at a rent that's $200 a week and suddenly goes to $350 and then they can't afford it. They just know it's keeping up.
So you can kind of come at it from like a maybe an integrity point of view on how to run your portfolio and take care of your tenants in a way.
Yeah.
But you're also taking care of your cash flow and your portfolio and enable you to hit your goals.
10 properties, $50 rent increase, interest rates come down by 1.5%. Not saying that they're going to zero, just say they come down 1.5%. There's another $50. There's $100 to spread across those 2 factors, which means that fat is your profit.
That's right. Yeah, there you go.
Yeah, cool. And since owning the properties, how do you feel like it's affected you? Like how do you feel different? Like,
for me, there is no difference. I'm not out partying on yachts and all that kind of stuff. But it gives me a sense of security. Like just moving forward in life, it gives me a sense of security that, like, hey, I've got some assets. Yeah. And this is cool. And it's not actually affecting me in any kind of negative way. We're not dipping into our pockets to actually maintain the things or anything like that. Just
thinking about it, as you said, like, you bought it for $460, the Brisbane one. You could sell it for $800, right? There's, say, $350K worth of profit. If you took that $350K, you could pay those other 2 properties out cash, or you could pay off, a chunk of your mortgage. I don't even know what your mortgage is, but you could pay out your mortgage, pay out a part of your mortgage, whatever it is. Like, they're options that you had that you didn't have before doing that. And most people only have the option of one job, one income, however many mouths they need to feed in their household. So all the things that you've had, like, there's no confetti. It's still to this day, I've never felt a day where, wow, there's confetti, let's go on the yacht and go party, right? It's just, you get more confident in life. It's like life becomes more fun because you've got more options and more choices and more freedoms. And,
for sure. So, look, I think it's a matter of priority. Like, everyone's got different priorities in life as well. So whatever your goal is, like, work backwards from there. If you are goal oriented, start with the end in mind. Like, how am I going to get there? How am I going to create that? And it might not be property. Like, it might be some other avenue that you do that with. But I suppose from our standpoint, like, property is just the chosen asset class, right?
Exactly.
And it ticks the boxes and it works. So.
Cool. And maybe just as a bit of a wrap up, like, what would be like the top few things that you see that successful investors do, and what would you think would be a parting note for everyone that could benefit them?
The successful investors have kind of a more of a bird's eye view of their portfolio. It's not a property by property by property by property. It's I understand the value of building an asset base, as opposed to looking at, this property, like, the council rates are like $200 more than the last property I saw, or whatever it might be. That's very, like, micro view on property investing. They have a much broader view. They're like, okay, cool, I understand what this property is doing for me.
Yeah.
I'm going to throw it into the portfolio
Yeah.
because that's what I need.
Yeah.
I need the cash flow. I need the equity.
Yeah.
Maybe they have a time constraint. Maybe they're going overseas, or they're changing how they earn income.
Yeah.
I've got a guy who's going from PAYG to self-employed.
Yeah.
So he's like, I want to just load up with 2 or 3 properties until I click over to ABN.
Yeah.
Or I got another investor. Shout out to Mel.
Yeah.
But she might be going overseas.
Yeah.
So she might be having like trouble getting finance in Australia.
Yeah.
So she's got a mindset where like, okay, well, I've got a timeline here, so I can do this probably now and we can reassess. But
that's a cool story as well. A client's got like 20 properties in 2 years or something. 18 months. Yeah.
She's awesome.
Yeah.
You know? So
I can always tell the difference between someone that's going to be successful from the start and someone that's, may not be, from the, even just down to the words they use. They go, oh, well, the house, right? It's like, well, the property. I use the word property. No one hears me say, oh, I own 200 houses, right? Because I don't own 200 houses. I own 200 properties, right? 250. I don't even know. It's over 250, right? But I don't talk about them as houses, but people just specifically want to look at houses and all these sorts of things. But that's an example of someone that's applied himself. And yeah, I know you've got lots of investors that you've walked from, no property or 1 or 2 properties to 10, 15, 20 in very quick time frames. So,
yeah. And they're like, I just want to do one at a time.
Yeah.
But they're open to the perspective. They're open to like your experience and our advice.
Yeah.
And they say, I just want to start with one. Great.
Yeah.
That's what you're comfortable with, no worries. And they realize, oh, it wasn't so bad, it wasn't so hard.
Yeah.
And it's doing what you said it was going to do. Maybe I can go 2 at a time next time. Yeah. And then all of a sudden, after 12 months goes by, they got 5 properties under the belt.
Yeah.
They're like, well, all right, what's up for next year?
Some people are like very conservative. And the coolest thing I see is when people are conservative because they're unknown, but they're really open. They're like, they get it and they get like a taste for it. And it's like, wow, like it's suddenly, they're looking at, okay, how can I make this happen? How can I get to the next stage? And it's really, that's probably one of the most beautiful things that I see is just people grow like that over the years. They're just, mindset shift. So, yeah. Is there any tips that you could share with anyone?
If you're thinking about it, just book a call. There's no expectation.
Yeah.
It might work for you. It might not. It might be appropriate. It might not. You might be in a position to do something. You might not. But you won't know until you have a chat. Yeah. So reach out, book it in, and.
Property investing is not for everyone.
Yeah,
right.
And sure.
That's cool. We need tenants, right? It's the reality, right?
Yeah.
People say to me, I had one of Charlie's clients the other day saying, "Why doesn't everybody do it if it's so easy?" And I'm like, "Well, it is easy, but there is, adversity along the way. There is things, and it's just how you view it, how you put processes, systems, procedures." And it's like, we need everyone in the ecosystem, and not everyone can go and own 20 properties and be no tenant. So it's important that it isn't. Some people like investing in shares, some people like business, but we know that we've got something that works and it's successful and it's proven and tested, and that's why we've got the children and the second generations now coming through, and it's really cool. So thanks for that, Pat. I appreciate you spending the time with us today. If you want to have a chat with Pat, call the office 1300 367 925. Ask to speak to Pat. You can email us at admin@B.Invested.com.au. And most importantly, smash up the likes, share this viewing with your friends and family. You can find us on Spotify, Google Play, Apple Play, and YouTube every Thursday. Catch up soon. Have a great day. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all tell lies, I know what they been telling you. I'm the opposite, the Donald Trump of Australia. It's amazing, here for the taking. My time is never wasted, just getting wasted. These girls say I'm really breathtaking. I can't help it if I really misbehave.